Today we're going to talk about the intracompany transfers. And there's a handout that you can get under chapter 23. I'd print that out and have that ready to follow through with today's lecture. We're talking about a consolidated company here. Parent company and its subsidiary, two subsidiaries. No money leaves the consolidated entity. We're transferring money from one department to another, from one subsidiary to another, from a parent to a sub. In this case, we're transferring money from a parent to a sub. So no money, make sure you accept that. No money leaves the company. Okay, it just goes from a parent to a subsidiary. So have this little handout printed out, have it with you. The first thing that is important, at least for me, it wasn't intuitive how cash flows through the banking system. So parent, I think of my daughter. So Tad writes a check to Lindsay. Lindsay deposits it in her bank. Her bank sends it to my bank. Okay. So parent writes a check. The subsidiary receives the check. The subsidiary deposits it in the subsidiary's bank. The subsidiary sends it to the parent's bank requesting a transfer. And that's why if we have an NSF check, that has to come unwound. It has to come back from the parent's bank to the sub's bank. So make sure you think about the order in which this happens. Now, on this, the check 4100 does not result in an overstatement or an understatement. The cash balance is correct. Now, the way I do this is I lay it out. Does the order make sense? So, yeah, the parent wrote the check on 12/31. The subsidiary entered the check on their cash receipts journal on 12/31. It cleared the subsidiary's bank on January 2nd, and it cleared the parent's bank on January 3rd. So those orders make sense to me. I also do T accounts, and so the parent subtracted the money, $50 in December, the sub added it in December, as it should be. Now, this will show up as an outstanding check on the parent's bank reconciliation, and it will show up as a deposit in transit on the subsidiary's bank reconciliation. So we should be able to find these. 4275 results in a $10,000 understatement. So I lay out the dates. So the order's kind of okay. Parent wrote the check on December 31st. The sub entered the cash receipt on January 2nd, cleared the sub's bank on January 2nd, cleared the parent's bank on January 4th. So there's no red flags there. But when I do the T accounts, I see, the parent subtracted the cash in December. The sub didn't add the cash until January. They should have happened in the same period. So I've got an understatement. Okay. This would show up as an outstanding check on the parent's bank reconciliation. It would not appear on the subsidiary's reconciliation. The subsidiary and their bank both showed it as a January cash receipt, so there's no reconciliation. 4280 results in a $20,000 overstatement. Here I got a problem, right? The parent writes the check in January and the sub records the check in December. I got a problem. I can see that right now. I do my T accounts. I've got the parent doesn't subtract the check until January, but the sub added it in December. I know the check was actually written in December because it cleared the subsidiary's bank account in December. It would not appear on the parent's bank reconciliation because the parent showed it as incorrectly. The parent showed it as a January check, and it didn't clear the bank until January, the parent's bank. It wouldn't appear on the sub's reconciliation because the sub showed it as a cash receipt in December, and it cleared the sub's bank in December. The last example is a red flag. Nobody's going to expect you to figure out what's going on here. The sub did not record the cash receipt until January. The bank statement provides evidence that the sub actually received the cash in December. Okay, so I'm just looking at the sub here. Guys, the sub recorded in January, and it cleared the sub's bank in December. So I know the sub actually received it. Why did the sub not record it? Usually we'd think that the sub would want to record it. But what we've got here, and nobody's going to expect you to know this, the sub actually has $5,000 less in the checking account than they show in the general ledger. The controller stole $5,000. This is an attempt to conceal that shortage. Depositing the $5,000 in the sub's bank on account on December 31st, but not recording it in the books until January, enables the sub to reconcile their bank statement. Okay. If they were to record that $5,000 deposit in December when it actually occurred, then their bank account would still be off by $5,000. So they choose not to record it, and then they can reconcile to the bank statement and hide their problem for another month, year, whenever. Tomorrow we're going to play the first or last game again. This is a game with which you're familiar. We've played it before, so it should be a review.